Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's keep up with our gold analysis. In the weekly report in the weekend on the gold market we discussed some signs of possible upward continuation. So currently we are not sure yet that market really starts the major retracement. There's a few reasons for that. First of all, we have untouched targets on the weekly chart that stands around 1548, 1568 area. They are not as significant as on the monthly. I mean the 1530 that has been hit. This is major monthly target of the large butterfly. They are smaller scale, so there's them, but still this is the weekly extensions. All of them stands as XOPs on the weekly chart. And actually the reason why market hasn't quite reached them is the weekly overbought. Strong weekly overbought this market wasn't able to overcome in the previous week. At the same time, for the monthly time frame, it's another $20-30 per contract are not really very big impact. So, and that's probably could be treated as the cluster of the targets. So it's major 1530 on the monthly chart and additional some targets that stands around it as below as above the market on the lower time frames. This is the first reason. Second reason, guys, is the way how market responds on the target. When you see that market hits the major target, but you also see that it's not hurry up with the reversal, it mostly shows some sideways action, flirting around the target without no response. This is bad sign for the bears, because the bearish market always run faster than the bullish market. You probably could know that. So the collapses on the market happens much faster. And any recessions, when you take a look just on the stock market, you can see that's lasting for just a few years, maybe 1.5, 2 years, while the rally could stand for decades or at least 5, 6 years. Why? It's because the greed is not as strong sense as the fear. Because when you have the greed, you're just trying to accumulate to get more profit, but when you feel the fear, you're just scared to lose what you already have. And at the first signs of the hazard, the collapse and the fear starts to work. It works much stronger, and that leads to the panic in the market and leads to fast action. The same story stands when the hitting of the major target. When the traders see that market hits the major target, they starts to have the fear to lose what they all have accumulated and starts to turn to fix and improve the profit. That's why the response on the major target should be stronger and fast. When you do not see it, it means that not it's just few traders starts to sell. Nobody's selling. And if nobody's selling, it means that they expect something else. So they expect maybe that market will continue to move higher. So particularly this situation we have right now. Once market has hit the target on the monthly chart, we do not see a really big sell-off. We do not see big contraction of the long positions, and market mostly shows some kind of the consolidation below the target. It could mean that market mostly shows reaction on the weekly overbought rather than reaction on the major target. And that's the second reason why we think that maybe it's not done yet with the upward action. Maybe market will proceed slightly higher. That's why we do not hurry with the taking any short position on the current market. What we could do in the shorter term perspective. On the shorter term perspective, we could keep an eye on the 4-hour time frame chart. This happens, you can see here with the divergence that we have talked about has been formed. Even on the background of this divergence existing of the 1530 major target, but not see yet proper pattern that could let us to take the short position. It's not time yet, probably. On the 4-hour time frame chart, we have to take a look at the 2 moments. First of all, guys, these lows is very important, because this was really big sell-off and reaction on the 1530 target. It was really fast. But take a look what has happened later. It has no continuation, market turns to the sideward action, and rather showing the chance of the possible upward action more. But this butterfly, if it will be formed, we have mentioned it in our weekly report as well, but if it will be formed, it will let market to complete both XLPs on the weekly chart. And the chances, odds on that this will happen stands actually above the zero. Because take a look, market is forming here the bullish divergence, hidden bullish divergence as well. And everything stands around these lows, guys. If market will break below these lows, it will erase the butterfly. And automatically, that probably increases chance on downward continuation because more traders will be involved on taking the profit. Because that will increase the fear. So when the downward action starts to work, more traders starts to worry on their profits. And more traders, especially those who trade on the short term, turns to the profit taking. That will lead to more acceleration to the downside. So this is actually obvious. And that's why these laws are very important. As from the technical point of view, because they will keep chance on the butterfly, and if it will be broken, butterfly will be erased. As from the psychological point of view, once market stands above it, I think that's not time yet for taking the short position. Besides, and take a look at the hourly. On the hourly chart, market still has completed our targets that we have talked about last week. Take a look. Market has completed this ABC top COP, and automatically that was also minor ABC repetitions. If you remember, we talked about the possible hand shoulder, something of that sort here. But anyway, this kind of the ABC repetition has been formed. As a result, we've got catalyst equal to buy at this moment, accompanied by the hidden bullish divergence here, and all the stuff that we have talked about, not quite strong enough reaction on a major target. That could mean something. That keeps us aside from the be too fast on the taking the short position. We think that's not sufficient context for selling gold right now, because we still keep on the table scenario with the possible another final leg up to complete the weekly XOP targets. This is possible. So we need more bearish signs before taking the short position on the gold market. That's our view. Speaking on the diamond that we have talked about, well, actually, market has broken the parallel line, so it was something of that sort previously we have talked about. But even the breakout of the diamond pattern here looks as a weaker factor compared to other stuff that we have, that I have talked about just now. So that's why yes, it could mean some bearish breakout, and indeed maybe we will get the downward continuation. But we need the guarantee. We need the insurance that it really will happen. And we suggest that taking the short position after the breakout on some retracement looks safer than trying to take the short position right now, because too much risk with another upward leg exists right now on the market. So that's our view on the gold, and let's see what we will get. Speaking on the bullish position, well, it is possible, because here you could take position with a very tight stop order. Placing stop just below this area provides good risk-reward ratio. And if indeed upward action will start, so this will be very, very good opportunity for trading. So that's what we will see right now.